Welcome to the chat where the deals get done. Real estate tips and a whole lot of fun. Think different, achieve your goals. Real estate simplified, that's how we roll.
Hey, good morning, everyone. Brandon Rizek here with Allied Mortgage, along with co-host Mike Cruz, broker-owner of Reside Realty. We're here today. We have a special guest today. We are so excited about this one because I'm going to learn a lot today. These are things that I personally don't know anything about. So welcome to Rachel Tigert from the Sloan Tigert Law Group.
Hi. Thank you.
Welcome. So we are here today to literally ask Rachel any question we can think of when it comes to divorce law and how it affects property, how it affects your loan, or anything in regards to divorce, and how real estate is affected. So I apologize in advance. But thank you for joining us.
Yeah, thank you so much for having me. It's a pleasure to be here.
Thank you.
So, Rachel, tell us a little bit while we're here, just a little bit about your law firm, what you do, who you are. What can you say?
Well, as I said, I'm Rachel Tigert. I am a partner at the Sloan Tigert Law Group. We are a small boutique law firm located in downtown Las Vegas. My specialty is in family, so that would be your divorces, custody, child support, division of assets and finances. Those are going to be the biggest types of cases that I handle right now. So born and raised in Las Vegas.
Right on, okay.
Proud Las Vegan, and happy to be here.
Awesome.
Well, cool.
Thank you. So the first question is for you, how property goes about being split in a divorce. I'm guessing usually if people can agree, that's great, but we know that doesn't happen. That's not real life.
Well, if it was real life, then I would not have a job anymore. So the general rule in Nevada is that property acquired during your marriage is going to be a community property asset. What that means is that both people, regardless of how property is titled, are going to be 50-50 owners of the property. So let's just say John and Sally purchase a home after their marriage. One person puts all of the money down for the property, $100,000 down payment. Mm-hmm. They're married for 10 years and they're making the mortgage payments. Well, they get divorced. John says, well, I want all the money back that I put into the house. And then we can split what was paid in after that. That's not how it works. That's a commingled asset bought during the marriage. It's unlikely that would be the division.
So you keep saying during the marriage.
Correct.
So I'm assuming that's key because that's what I'm picking up because that keeps getting brought up. So what if it was prior to marriage?
So
I know this is broad. Okay, so you have to give broad, general answers because you can't be exact.
Correct. I mean, and every case is going to differ
100%.
Because every asset is owned differently. But if you purchase property prior to marriage, the general concept is that, and this is the key thing, the property itself would be a separate asset. That means that's my asset. I'm keeping that. The nuance here is that if the spouse has been contributing to that property, paying the mortgage, paying the taxes, there can be an argument that they have an equity interest.
And if you have a joint bank account, how do you decipher that?
So the only way to decipher when you have a joint bank account whether or not specific funds were used for specific items would be what we call tracing. And you didn't want to get into specifics, but yeah. So you would have to hire a financial analyst to do a forensic tracing to determine whose money went into what account, what was that money used for. It's very difficult once money's in a joint account.
I used to have to do these things. So when you said that, I literally cringed. It triggered post-traumatic stress for me.
Are you okay?
I hate that entire form of the business. So,
yes.
So I understand what you mean now. Okay, cool. Now, while you're married, you buy a property.
Yeah.
Okay. was it Joe and Sally was your example? I don't know.
I have a real life story here, or a real life situation where I had a transaction. Something happened within their marriage. They were still married. The husband, I know 100%, planned on buying a new property that he could afford on his own. Spouse signs a quitclaim deed saying she has no right to the property, and they close on this new home. Does she still have the right to go back to that?
That's going to be a really hard argument for her to win if there is very clear intent that this was their plan, that he's moving out, he's buying his own property, they're going to figure out a division of the joint property, the marital residence. That's a very clear intent. Now, I mean, sometimes people very quickly and hastily move out of properties and they think that they're abandoning. That's the biggest question I get is, am I abandoning my property if I move out? No, you're not abandoning your property. You're separating and maybe doing what's best for your relationship at that point and making things work. If you continue to pay the bills and be responsible for things, you're not abandoning that property. But going and buying a new home, signing that quitclaim deed, that's showing pretty clear intent that you're not an interested party.
Right. I know the wife had intent to try and keep the marriage together, and so she went along with it.
Oh, okay. Well, that's a different story. I mean, that's like, hey, honey, I want to go buy an investment property that I want to keep separate from you, and I don't know. I feel like, I feel like,
doesn't sound healthy at all.
I feel like we're venturing more into a therapy session there.
Okay.
So to Mike's scenario and your answer, so quitclaiming, the intent of a quitclaim deed. Now, quitclaim is signing off your spousal rights to a property. Essentially, you are signing off on the community property of Nevada's rights, right?
The deed itself, by law, is saying my 50% interest that I have in this community asset is I'm giving it to my spouse.
Right.
So I no longer have a vested interest in this property.
And a lot of people think that automatically disqualifies their spouse from being able to make a claim to that property, which it does not, to my understanding. So, there are things that where just because you signed off on a property, like you said, the intent and all of that, but what if you have a joint bank account, your money as the person that's leaving or signed off on it is helping pay the bills for that property and you want some of that back? You mentioned something called an equity share.
Correct. So there's a principle in law where you have the asset itself, which would be the house, and then an equity interest, which is the value itself, the money. So we have situations all the time where maybe at one point during the marriage, and we saw this especially during COVID when refinancing was a huge thing in COVID, but maybe one party lost their job during COVID and no longer qualified to be a co-signer. One spouse is now the owner of the property per the mortgage. They're both on title, but only one on the mortgage. So they're still both paying into that because it's a joint, they're jointly own it, they're using their joint account. Just because one person is on a mortgage or one person is on a deed doesn't entirely mean that the other person is either relieved of the mortgage obligation or divested of their interest. There's a lot of nuance around that.
And I think that's really important to say and to understand, because a lot of people don't know that. A lot of people think, well, I bought it, my wife signed off, or my husband signed off, or whatever, your spouse signed off, I should say today, and I pay it out of my paychecks, out of my bank account. Well, I don't know that would always disqualify, them from getting some piece of your property. And I think that people, if you're going to, go down this road and all of these things, so you need to consult somebody, because this could definitely come back and hurt you.
Well, I think, and this is a lot of what we're seeing now, especially with more investment properties that were purchased, prior, is prenuptial agreements.
Right.
And I don't want to jump into that, but that's one of the biggest ways to protect assets and to set out what happens to property if there's a dissolution event. And that's where we protect our assets, especially if we purchased it prior to marriage or we purchased it singularly during the marriage and there's an understanding. We then do a postnuptial agreement. Without anything in writing, it can be difficult to tell what the intent was.
Right.
It's
your side versus the other person's side.
It's he
right?
said, she said.
Right. And I'm sure there's a lot of that in divorce, I'd imagine.
Just a little bit. Just a little.
Just a little.
There's always two sides to the story.
Right. Right. So, and we hear prenup. I hear prenup, I should say. And, you get offended. You say, okay, that sounds good, but like, how do I bring that up to my spouse or vice versa? How do I bring that up to the other spouse? And I think in today's world, a lot of people are getting married later in life
Right.
than they were maybe in our parents' generation or grandparents' generation. And a prenup isn't always a bad thing, but like you said, you don't have to specify, I get everything and you get nothing. It could just be, look, I had these properties, I had this before, and this is where I want it to go. If these are, do you agree? These are things you're just putting in writing. And I'm not over here pumping prenups, but at the same time, I think that it's a misconception that it's automatically a bad thing.
Well, I think the misconception is that you're planning for divorce.
Right.
I think that's the number one thing that when someone, comes to me and they're like, my fiance wants a prenup.
Right.
What do they think I'm going to take? And I'm like, no, but we never want to plan for a divorce. That's no one ever.
Why get married?
Why
Right.
get married? Why go through that? But we also want to make sure that as we're getting married later on in our lives, we're more established, especially with retirement accounts,
Exactly.
with
That's what I
properties,
mean.
things that we've spent a lot of time cultivating and investing in. Those are worth protecting because otherwise, by nature of the law, especially when you're married and things get commingled, there's a lot of gray area and you
Right.
could end up
Right.
losing a lot of that.
100%. 100%.
Yeah. So when a property's in a trust, does that change things when people get divorced?
Well, that's
question, Mike.
so it depends. Is it an irrevocable trust or a revocable trust?
Let's go revocable because that's the most
The
common.
most common is a revocable trust. So no, nothing changes.
Okay.
When you have a property that's part of a revocable trust, what would typically happen is that when the parties have figured out what they're doing with the property, they will sign a deed that removes it from the trust. And whether that's selling the property, so it's sold to a new owner, one party is owning it, taking it in the divorce, you just move it out of the trust and into the new owner's name.
Okay.
And that's
That's
not
it.
hard. Yeah.
Okay.
Excuse me. So I'm going to take this question if you don't mind.
Go ahead.
So because I'm a mortgage guy and finance guy, I need to ask you this. I get asked a lot, and I'm not supposed to give this advice, but sometimes we do. And what if both of you, both of the people on the getting divorced are both on the mortgage, and one spouse is buying out the other spouse, but they can't qualify for a home, the same home, or they don't want to refinance that loan or get the person off of it. Now, we're going to talk about the word assumption after this, because that's coming. We'll explain that in a minute. But what if your loan's not assumable? You have both people who qualified, income-wise, and so the one person can't qualify on their own, but they want to keep the house, and the other spouse says, okay, you can keep the house, but I need off the mortgage. What
So-
happens there?
That's a tough one and it's something that we are seeing a lot right now because of the interest rates that we had a few years ago versus what we have now. Really, it comes down to your ex-spouse. There are situations where both parties can remain indefinitely on a mortgage so long as that mortgage is getting paid. there's a benefit to the non-paying spouse in that their credit is getting that boost of that continued payment every month. So that is an ongoing benefit. If both parties can agree, then there's nothing forcing the refinance. What we typically see in a decree of divorce is that there's a specified time.
That was my next thing.
Okay.
That
Yes.
was my next
So,
thing to talk about.
so, and that's really going to depend on the nature of the divorce itself. So I've had some divorces that are highly contested, and so the amount of time that's given is 1 week, 2 weeks to start
Shorter
the
period of
process
time.
to show. And it has to be very specifically stated in the decree, because if you don't specifically state when is the timeline to start the process, where do they need to be at certain points, it's going to be unenforceable or hard to enforce or have to go back to court to enforce. But we typically see, I've seen 2 years given.
I see that a lot.
Okay.
So we
Yeah.
have to read the divorce decrees when we do financing, because we need to see if there's any money owed.
Right.
Assets sometimes get divided where, yeah, you're on this property, but legally you have no ties to the property because of the divorce. So we have to read all these things. So a lot of times what I see is 6, 12, or 24-month timelines where this person needs to either sell the house, refinance the house, or just get their spouse paid out and done. They don't necessarily have to pay them out at the divorce. They have a timeline to pay them out or get them off the mortgage, get their equity share to the ex-spouse.
Right. And keep in mind that, obviously we always want to abide by a court order, and we want to, we want to stick to that. But there are times where if parties are in agreement, like say one party, the party who left the residence can't buy another property yet or isn't wanting to buy another property. They don't care. They may not be, they're like, fine for right now, it's fine.
Right.
Get it in writing to say that you can extend past that period of time in your decree. I've had people who go 5-10 years before they're able to do something. But get it in writing,
Yeah.
so that if for some reason that spouse is like, oh, I'm going to take them to court now and try and force them to sell the house,
Right.
you have something to say, no, we had an agreement.
Well, I have one more question for this,
Okay.
and this is, I don't even know if you can answer this. The person, 2 people get divorced, one person, both of them are on the loan. They have a 12-month timeline. Let's just throw that out there. There's a 12-month timeline on getting that person off the mortgage, however you buy them out, whether it's selling the property, refinance, whatever it is. What if the spouse who is paying the mortgage and keeping the house misses payments?
If they miss it in that time, then the non-paying spouse has a right to go to the court and request that the house immediately be placed for sale.
Now, should it affect their credit? Because legally, in the divorce, so you have banks, you have the credit, you have the court, you have the bank, you have all these people's opinions. Because I know my opinion, but in your world, it might not be opinion. I don't know. Should that person have that late payment on their credit report, even though they're not legally obligated to this property anymore?
Well, here's the thing. Mortgage lenders, banks, they don't care what a decree says. If there are 2 people on a loan, you are
They're
both
responsible.
obligated to pay it regardless of what your decree says. Your only right, available right, is to go back to court and ask the judge to sanction, essentially. And so if your credit's affected, nothing is going to fix that. There's nothing a judge can do to force the credit companies to
Right.
fix that credit. You can contest it, you can try and go back and get that fixed. What the court can do is put in motion things to cure it as soon as possible, whether that's forcing the sale of the house, sanctioning, giving you money as damages. But that's all that can really happen. So you're really trusting your ex to
Because
make
these
those
things
payments.
do happen. These things happen
Right.
a lot. A divorce could hurt somebody financially, even though they have full intent of paying the monthly payment. What if they're
Absolutely.
late?
Right.
So now, on a bank size, for doing a mortgage, I have to tell you, if that divorce decree is signed, stamped, and filed, okay, and you're not obligated to that property in the decree, we don't hit you for that payment. We don't really care. Now, but the credit bureaus
The credit
care,
bureaus.
so now I'm going to care about your credit score. So I care about your credit score, but I don't care about the property.
And that,
so-
It's a double-edged
it's a
sword.
double-edged
It's gonna
sword.
get one way or the other.
It's a
Yeah.
lose-lose. So that's why I asked that question.
And that's why you really need to trust that your ex-spouse is going to make those payments.
Well-
And here's something I ask my clients every time we're in this situation, whether it's my client retaining the property or the other party, is can you or the other party make these payments? Like, is it realistic that on separate incomes, your own incomes, are you going to be able to make this payment? If or can they make this payment? You know what their income is,
Right.
hopefully.
Right.
Hopefully.
imagine.
But and
imagine.
if that's, and that's those hard discussions where we decide maybe it's best to just sell the house because with a single income they can't make that payment, or it's making hard choices between what bills to pay, and that's just not a viable situation to be in.
Yeah.
Makes sense.
And I would imagine from time to time it even happens intentionally to where
Yes, it does, but
I mean, Mike, it's a
Yeah,
real world.
right.
You're right.
it does, but
It's a
I would
real
say
world.
not as often as you would think.
okay, that's good.
Yeah, I don't think
There's still faith in humanity. Mike.
No, oh no, it's not that. I don't want to say it's that. I think it's more that people realize that doing that is only going to harm themselves as well. So it kind of just depends on the person. But
Makes sense. That makes sense. What about loan assumptions?
oh, that's a fun one. So
You're both on the loan. Let me back up. An
Yes.
assumption. I need to back up. Mike, stop me if you want to take over any of this.
Go ahead.
A loan assumption is essentially when you assume responsibility for a joint debt, a joint mortgage, okay? Now, there is an assumption where you can be assumed onto a mortgage when you were never on there, or you can assume somebody off of mortgage, meaning you are releasing them of liability of that loan. So I'd imagine if your loan is assumable, and I'll tell you 99% of the time in the mortgage world, FHA and VA are assumable and conventional is not, or a jumbo loan is not. Okay, so if you have an FHA or VA loan, there are assumption clauses there. If there's a conventional loan, I will tell you there are no assumption clauses that I'm aware of. So, but to give you a general basis of this, you can have somebody assumed on or assumed off of a loan, or both. To maybe get your ex-spouse off, you might need mom to co-sign or Uncle Dan to co-sign, whoever it is. So you're assuming your spouse off, but you're assuming somebody else is on, but you get to keep your 3% interest rate. So, and there's a whole equity buyout there that might need to happen,
Yeah.
So I'll let you take it from here, Rachel. Is this a thing? And I imagine now it's more common than ever.
it is definitely more commonly requested right now.
That's a great way to say that.
Yes,
That's
it
very
is.
good.
I would say it is the most commonly requested option when one party is trying to remain in the property, and that is again because we're seeing homes with those really low,
Interest rates.
low 3 interest rates and now we're in the 5, 6, 7s. Some of them. Assumptions are as you said, it's nearly impossible to get if you have anything other than an FHA or VA loan. I am on board with assumptions if you can do it, because it keeps that interest rate and it keeps the property out of that at a mortgage rate you can afford to pay. Because a lot of times, if you are refinancing it right now, sometimes your payment is nearly doubling.
Right.
Sometimes, most of the time now.
Yeah, I
It's
mean,
sad. It's true.
it's crazy expensive, and that makes it almost impossible for people to remain in their homes. So, am I a fan of assumptions? Absolutely. Does it happen? Not often. I always put it as an option in a divorce decree that a party may assume or refinance whatever removes the ex-spouse from the title.
So,
Or not title, sorry, the loan.
so with assumptions, there's also a whole nother caveat that people don't realize. There's two caveats, actually. So, let's say a property is worth $500,000. You owe $250,000. So there's $250,000 there. Well, guess what? You want to assume it because you have a 2.5 interest rate, but your ex-spouse is owed half that equity. So you're releasing them from the property, the mortgage, whatever it is. Well, they're not going to just say, hey, pay me later.
Right.
Well,
They're going to want, it can be agreed upon. But most of the time, the issue with assumptions is you have to come in with the equity for the spouse. Otherwise, you're going to have to do what's called a cash out refinance and pull that money out to pay them out. So assumptions sound great,
or
But-
HELOCs.
or sell, or HELOCs.
HELOCs are an option too.
but if you can qualify with that assumption, usually you can't close simultaneously depending on your loan.
So that's where we get creative with division of assets, though, is that sometimes when a party, especially if the equity interest is not substantial. I mean, when we're talking about maybe $100,000 in equity or $200,000,
Maybe you can pass off the 401k for that. whatever.
you can give a different asset to equalize that, so you don't have to worry about that and qualify for that. But that is a very, what we are seeing is family members are having to come in and pay off the ex-spouse, so that there's nothing nothing in the decree that would prevent that payout, triggering that signal that
Sure. Right.
there's an issue. But that's typically how we would have to write it, is that it's already, that they're already paid out their equity and there's nothing owed out of the house. But that's difficult to do if you don't have the wherewithal to do that.
Right.
I'd imagine most don't, but
Most of the time that money is tied up in retirement, and that means that the party that would be getting the retirement can't access it until they hit retirement
59 and a
age.
half,
Right.
and then if they take it
Or
out early, there's
penalty.
penalties.
The
and
penalties
there's
on penalties and penalties, so that's something to keep in mind.
Not an easy thing to
No.
just sign off and say.
Well,
So-
and I'm sure you go into this, but with the VA loans, even when assumptions happen, that reduces the ability for the veteran to get another property. So those are things we like to keep in
Right.
mind when we do these.
I'm glad you brought that up. That's a big thing with
That's a
assumptions.
huge thing with assumptions.
So, Mike, how many times you have a VA buyer that already had a VA loan, but
Right.
they didn't pay off their last VA loan, but they want another VA loan?
Right.
So-
And they're not able to use that.
Well, you're allowed to have.
Some.
Right.
You can have multiple VA
Well,
loans.
right.
But you only have so much eligibility
Eligibility,
with the
yeah.
VA. So every home that a veteran finances through a VA loan, uses up so much eligibility, and everyone is different. There is no one in the same. So there's a calculation to say, okay, if you don't restore that eligibility from that VA loan that you previously had and you want another one, well, guess what? You probably need money down now. You're not going to be able to get the same zero down loan that you had before.
Right.
So if you are a veteran out there and having an ex-spouse assume your loan, or, a lot of people with VA loans now are selling, trying to advertise, hey,
Right. We're seeing it in traditional sales.
traditional sales too, where, hey, assume my 2.5
Yeah.
interest rate as an incentive to come buy that house, right?
Right.
Well, people don't realize by doing that, you've tied up your eligibility until that person pays off that loan or sells the house. That could be 20 years from now.
Yeah.
And what happens if they foreclose? Now your eligibility will
It's
never
gone.
be restored.
Right.
So there's a lot of risk on the VA side if
Yep.
you're the veteran, especially in a divorce situation. That spouse probably isn't going to care. You never know. Maybe they will. But what if they don't care? And what if things happen? And now you're never going to get your zero down loan again, or for a long period of time.
Yeah.
And that's, and that's something that's not, talked about a lot. And that's something that the attorney should definitely be bringing up with their client, especially if they know that their client is either active duty or a veteran. And how is this going to impact you in the future with your
Right.
with your assets?
It's one of the best benefits out there for a veteran. So
100%.
Yes.
you don't really want to just give it up or lose it.
That's
100%.
absolutely.
100% finance. So. Now, Mike, I know we get this a lot. I'll let you take it from here, but let's talk about buying before divorce.
Right.
Everybody says it's cordial. How many times do we get this? You probably get it even before it comes to my desk because they want to sell their house.
Right. They want to sell. or they need to sell. They're being forced to sell a lot of times. And they don't want to be a renter. They never want to be a renter. And they insist on buying. And a lot of times I have to explain that they're really better off waiting. Just because you need that spouse to agree. And it really comes down to, do you have that agreement or not? Because if there is that agreement and the other spouse is willing to sign that quitclaim deed before the divorce is finalized,
But
sometimes
even
it
then
can
it
work.
gets tricky, man. What if
I
things
don't
go sour in
recommend it.
between
But
that?
here's,
you know?
and this is where I would say, if you have clients who are saying, I'm married, but we are going through a
Talk
divorce.
to you.
They tell them, I would like you to have an interim order.
Right.
It's just an order. If there's a pending divorce case, we can enter orders at any time. And all it would say is that the parties have agreed that they're going to sell their marital residence. This party's buying this property and the other party agrees they're not going to have an interest in it. That way we have an enforceable order that they can't go back on later and try and
Right.
get some sort of equity in the property.
I will tell you, 98% of the people out there don't even do this. They don't want to do it. They never even would cross that bridge to do it, and they should.
Which part? Which
No, like they get
talking
this
to the attorney?
temporary owner. Yeah, they don't want to do
No,
that.
they think a handshake. You know, a lot of people think, I know this person. I've been married to them. I know what they're doing. Things change in a divorce. All sorts of emotions come up, and that's, get it in writing, get it in an order. Talk to your attorney.
Years
Right.
ago, I had a situation where clients were mutually going through a divorce. Everything was good. They were handshake dealing everything. They wanted to buy before. Well, the person found out the reason for divorce was the other spouse was cheating on them. So after their handshake deal, in the midst of all this, they find this out, and now the divorce from handshake deal goes sour. And now it goes from great to nasty.
Yeah.
This is why I always tell people, you think you have a good deal. You don't know. You don't know what can happen.
Well, and Nevada is, I don't know if we all know, but Nevada's a no-fault state. So whether or not someone's cheating or having whatever's going on in the marriage, the courts are not going to care. But that doesn't mean it doesn't affect the overall divorce
Right.
itself, because hell hath no fury like someone who has been scorned, and they can make the entire divorce process a nightmare.
Right.
So that's, get things in writing.
Yes.
and
Well, now
talk to your
instead of, oh, you
attorney.
have this much, now let's trace the bank account. Now let's do this. How much was spent on your affair? These are things that would come up, I'd imagine, because now that person is questioning everything that they agreed upon. Why am I giving this money to somebody else? You know what I
Yeah.
mean? Or whatever it is. So these are things that come up. So don't just trust the world. You need to, in these situations, as clean as they can be, as well as you know your ex-spouse or soon-to-be ex-spouse, it doesn't mean things won't get bad. You need to just spell it all out and have it done with an attorney professionally.
My advice in that situation would be that the divorce needs to have been initiated, and there needs to be an order in place
Right.
before one party is going and buying another
Wow.
property.
Right.
I think that's the
Absolutely.
safest way to handle that.
That's a great way. I shouldn't say
Yeah.
don't do it without talking to an attorney. I shouldn't say that. I'm sorry. You're right. You're 100% right. Put it all in writing, though.
Put it at
Yes.
least, at the very least, have something in
Right.
writing. But best case is that your divorce has already been initiated, so we have a case. We know that this is where you guys are going, and that again goes towards that intent. We can show that they were already in the process of divorcing, that they had made this agreement. So we're building that paper trail.
Right.
Keep a paper trail. I don't know why people don't like, and I don't care if it's a virtual paper trail, but keep a paper trail.
Something,
Yeah.
right?
Something. I don't know why everyone is adverse to putting things in writing.
Writing,
And
yeah.
like it's,
Right. I
That's-
think
that's case.
personal relationships, everybody wants to trust each other, but can't always do that.
Well, you can't. I mean, but even then, it's like, I can't tell you how many times my marriage, we'll say things. We think that the other person completely understood everything we said,
Right.
and whether there's ill intentions or not. Like usually, 99% of the time in my house, it's not bad intentions. It's just a misunderstanding. And that's the problem with just saying it, even though you think you agree, you think everything's great, you have no ill will, but you just have a different interpretation of this than the other person did.
But I would like to, I want to point out that divorce is a very, no matter how cordial the parties are, if it's a marriage and it's been and I'm not talking about one, like 2 months, 3 months, but a significant marriage, it's a traumatic event.
Yeah, right.
And I don't think people really take into consideration that when they first say, like, okay, we're getting divorced, this is it, this is where we're going, and they start making arrangements, they have not processed anything. So I get clients who come into me at the very beginning, super calm, they know what's going on, they're like, we've agreed to everything, and it's a couple weeks later, and I mean, it's just, the everything has blown up because it's settling in. They're realizing the magnitude of what's going on. This is a major life change. And what they agreed to a couple weeks ago when they were both, calm and not contemplating what's going on is no longer agreeable. Or both parties have now talked to an attorney and realized that their agreement was a really ridiculous agreement or something along those lines. And so that's where we see a breakdown is that, well, we agreed to this at the very beginning. Yeah, but now we're here and that's not where we're at.
And these are big things. I can't tell you how many times I get a joint application. We've done deals together,
Right.
Even people in your office. We've done deals together where they're going through divorce. They need to sell their property, and each one of them wants to buy their own property with that equity. And the first question I ask them, when's your divorce going to be final?
Right.
What type of loan are we doing? These are things that affect what you're doing
Right.
and where you're about to go, and can this come back and hurt you by
Right.
doing this? So, go
Well,
ahead.
as a lender, in the mortgage business, is it your preference to see these interim orders that specify, that one party this is an order of the court signed by the judge that this is how things are going to happen with the properties?
Well, sometimes it's needed depending on the qualification of the mortgage, but I will tell you most of the time it is just me looking out for them because they're ignorant.
Yeah.
They just don't know what can happen by doing that. And, it's our job to protect our clients, as best we can. And, these are things we see. Obviously, we know you see this, but these are things that we deal with and see where we just know from experience that it could really come back. And then now they're calling the real estate agent or the loan guy and be like, why didn't you tell me? Well, it's like, sorry, man, I'm not a divorce attorney.
Well, right.
You know what I mean? But at the same time, if I can give them a heads up, I'm going to try.
And I can tell you the escrow and title companies prefer having a divorce decree in
Oh,
hand.
yes, they do.
They prefer.
They
I
don't
know
want any
that-
liability.
Yes.
Right. The decree is always the preference
Yes.
when purchasing and properties, especially when a divorce is in there. We want the final decree. But I've always wondered, because I like doing the orders because I want something that I can go back to the court and say, no, this is actually what they agreed on and
Right.
everyone signed it. But I didn't know if that was if that was a preference on the financial side too.
It just depends on the qualification.
Yeah.
Yeah.
Because how do you go from one primary residence to two primary residences? A lot of times they
Right.
size down from the
Justify that.
divorce and stuff. So there's questionability with occupancy at that point. And what are their real intentions? Are you both just trying to buy investment properties with low down payments? These are questions that we go, but that's a whole different situation that we try to not assume the worst. You know what I mean? But, you don't always want to think somebody's lying to you or cheating the system, but sometimes we have to validate that they're not doing that.
Right.
If that makes sense.
I mean, I feel like, especially in a divorce, the truth is always in the middle. It's, your client, my client has one perception, the other party has another.
Always.
I have had people, and you find these out most of the time after, but I've had people get divorced so they can buy property and then go back and get remarried.
Yes.
I have had do that. I've had that happen. I've had people get married for buying
Right.
property and then divorced after. And you look at it and say, is it really that non-sacred? But that's just opinion. To me, marriage is way more sacred than that. But these things do happen, and sometimes to answer why we might need it is because these things do happen, and people do it just to do it. to get better
Well,
terms.
Yeah, I mean, I think that's a bigger question,
Yeah,
especially
yeah.
I see, we see a lot of marriages for health insurance. So
Yeah.
Right.
but that's a whole other,
Yeah.
But it happens.
it happens. Right now we see a lot more domestic partnerships. That's what we're
Okay.
seeing a lot more of instead of marriages.
Can you get health insurance with that?
You sure can.
Look at that.
Domestic partnerships provide you with the same benefits of a marriage, but without the underlying, I guess, religious aspects of a marriage.
Right on.
Gotcha.
Okay.
So a lot of that was, I think, in COVID that became a lot more popular when people lost their health insurance.
What was it? You ever see the movie The Birdcage
Yes.
from Robin Williams
Yes.
and Nathan Lane and all that? Remember the PAL agreement?
Yes.
When you say that, I
Yes.
just think of
Right.
the movie The Birdcage.
Yes.
One of my favorite comedies of all time.
That
It's
was a
hysterical,
fantastic
so-
movie. Very
Absolutely.
underrated.
Very underrated. So. Anyway, off topic. So, Mike, do you have any more questions or anything?
I think we've learned a lot today.
Yes,
I
we
know
have.
I have.
It's probably a lot of information.
Right. Hopefully we don't need all of it at one time.
No.
Hopefully, no offense. I don't want to put you out of business, but I
Right.
hope nobody needs that.
Yeah.
So
Don't
don't wish it upon anybody.
Yeah, and my goal and when I'm doing my clients' divorces is always the most. I would like to see the quickest, most efficient way for people to get divorced because there's no sense in both parties being bankrupted by a divorce.
Right. I
agree.
No
No,
one
and-
benefits.
I'll tell you, a couple of years ago, I had a situation, couple getting divorced, and I was actually told by the attorneys that it was the longest divorce in Nevada history.
I believe
And
it.
the toll that it took on both of them was traumatic.
I imagine.
We could
Yeah.
have a whole podcast on
Right.
pettiness during divorces. I mean, that could last
Yeah.
at least 2-3 hours. I have stories on stories.
Yeah. So,
But then I'd be giving ideas to people, so maybe not.
right.
Let's not do that.
We appreciate the great information and just we appreciate you joining
Yeah,
us.
absolutely. Thank you
Thank
for having
Rachel.
me.
Absolutely.
Yeah.
So thanks,
All
Mike. All right, we'll see you guys next time. Please remember, like, subscribe, thumbs up, the whole nine. Please, Mike's way better at that statement than I am. I don't even know what to say, to be honest with you. But thank
Just
you all.
follow us.
Follow us. Thank you. That's what I was looking for.
It's very
So,
direct.
Okay.
Thank you all. Until next time.
Welcome to the chat where the deals get done. Real estate tips and a whole lot of fun. Think different, achieve your goals. Real estate simplified. That's how we roll.